G'day ladies and gentlemen, and welcome back to another Bitcoin update. We have broken back above the critical uptrending line stemming back from October 2022. As you can see, this line has been acting as support for a long period of time. Briefly over the last 5 or 6 days, we have actually lost it and it was acting as resistance. We broke down below that yellow line stemming over here and we went downwards. We formed immediately a triangular formation right on top of this blue moving average here, and that is the 50 EMA. Now look, as you guys might already know, I've mentioned a few times, the 50 EMA is kind of like the last kind of line in the sand between a small correction and a big correction. Generally, when you lose the 50 EMA on the daily chart, if we're looking for, the last year as an historical example, generally speaking, losing that level, I'm circling a few regions here on the screen, leads to a second leg of the correction. Fortunately for us in this time around, we were able to form that triangular formation that you can see on the daily chart and here in the 4-hourly chart right on top of the 50 EMA, and we were able to bounce up successfully. Now, in yesterday's video, I made a very, very clear prediction for what would happen if we bounced upwards out of a triangle formation, and I said very clearly to you guys, this would be an optimal place to take a long trade. And that actually did break to the upside. We broke that triangle to the upside and we did get a nice long trade there. If you listen to me in that regard from 15-minute chart, you would have entered this coin, Bitcoin, you would have entered this trade at around 27.9k. We took the trade up to 28.6k roughly. A nice little 20% profit on 10x leverage there for Bitcoin. So congratulations on that trade. But after all here and moving forward here, what we're seeing really is Bitcoin breaching back above 28.6k, and 28.6k being the pink line on the screen and 28.6k being the yellow line on the weekly chart here. Now 28.6k is basically the strongest support and resistance zone that Bitcoin has seen since 2019's famous 6,000 USD level. So it's very much the most important level we've seen since 2019. And us breaking above it briefly on the weekly chart there on this weekly candle was great, but then we came back down below it. We closed back below it on the last weekly candle close. And now, of course, we're edging back above it once again. It's a bit of a confusing, kind of a bit of a fuck around, to be honest with you, in the price action here. But, if we manage to close back above it here, currently we're lurking around 29k, and we're above that resistance. If we manage to close back above it on the weekly chart in 4 days and 14 hours, we are in a very good position for Bitcoin on the macro scale, and we will be looking very good again, and that fake out back down below would be nothing more than a fake out back down below, and we're still on track there. Now, coincidentally, or maybe not so coincidentally, right, in 4 days and 14 hours, the weekly candle is closing. Again, if we get above 28.6k, that's really good. But in the same period of time, the same 4 days and 14 hours, the monthly candle is also closing. And this is very important as well, because we've established this in previous videos. The monthly chart has a very critical moving average as well. That is the 21 exponential moving average, the blue line you can see on the screen here. We have formed the same structure in 3 separate bull and bear markets now, where we formed that red horizontal level, that red horizontal support level you can see on the screen. Once we lose the 21 EMA, historically on the monthly chart, we drop back down below that red level and we go downwards towards the yellow horizontal level, and that is the ultimate bottoming level. Now, we did the exact same thing in 2021 and 2022. We formed the red horizontal level, we dropped back down below it after losing the 21 EMA, and we formed the yellow horizontal level, which was our ultimate low, and I do believe that was the bear market low. I think the blow was in. But right now, we're in the process of trying to get back above, the 21 EMA on the monthly chart. And at this point in time, if we go to the linear chart, non-logarithmic, we can see that we're actually struggling to do so, okay? So, we need to be seeing, right, another monthly candle close above the 21 EMA on the monthly chart, and that would confirm an ultimate breakout. I do have very high hopes for the monthly chart. I do think the monthly chart looks particularly good. I mean, we've already closed above this 21 EMA in the monthly chart. We're already looking good with that said. But overall, we do need to see another candle close because we have seen a wick below it. So this candle here would validate that last candle close and would be a confirmed breakout above. And in coordination, we'd hope to see a weekly candle close above 28.6k, and both of those things together should be enough strength for Bitcoin to finally leave this correction behind us here. Am I surprised the correction didn't go lower? I'm not going to make any claims like that yet because I don't think the correction is necessarily confirmed to be over yet. I have made claims in the past that 28.6k is a weekly chart level. I don't think daily closes above 28.6k justify me saying it's broken above. I think we need to wait for the weekly candle close. But overall, I'm macro bullish, of course, and I'm macro bullish for many, many reasons, and one of which actually is the monthly chart. And if we look at a different monthly chart on a different kind of chart that I have saved here. I can show you, something that's quite extraordinary that I think will kind of shock a lot of people. Well, first of all, we've got the 4-year cycle theory, of course, and that's something we've looked at quite a lot. But the other thing I want to look at is here. Let me bring it up for you guys 1 second while I bring it up. Monthly candle, and we'll go to, I believe I have it saved on the BLX. Here it is. So basically, we have a monthly chart RSI, okay? And that monthly chart RSI, when combined with the 14 moving average on the monthly chart RSI, the yellow line you can see there, generally has pretty major crosses. When the RSI line crosses with the 14 moving average in a bullish format, which is when the RSI price jumps above the 14 moving average, we see a bullish cross, and those are indicated by green circles. And when the opposite happens, that is called a bearish cross on the RSI. And generally speaking, after a bullish cross, we go upwards for a period of time, as seen in these green spaces. And as seen in the red spaces, that's after a bearish cross, we go downwards for a period of time. We have just seen, right, in February, a bullish cross between the monthly RSI and the 14 moving average on the RSI. And that, generally speaking, has been indicative of major price movements to the upside, including 5,700% gains in 2015, 228% gains in 2019, and 550% gains in 2021, the latter of the two within months, okay? So we're in a very good position on the monthly chart here. And there's all the reason to indicate that we will be going further upwards on a macro scale. It is worth noting that on different charts on the monthly, some of the charts show that we haven't actually got above the 21 EMA yet, and that's another reason why we need to be seeing another close above it. And that close above it, we'd be looking at a 27.7k monthly candle close. But given the fact that we're closing the weekly at the same period of time, we're looking for a monthly and weekly candle close above 28.6k. And that will be a very, very bullish thing for Bitcoin. As for Ethereum, Ethereum's managed to get back above its major yellow resistance line as well. That was fighting for resistance for 4 or 5 days here, and that's great to see. And the same thing has occurred on the total cryptocurrency market cap. It's not quite above it yet because the total cryptocurrency market cap's resistance actually stems up to 1.167 trillion. We're on top of that resistance right now, but overall, actually, as you can see in the last probably 10 minutes, we've jumped above it here. So it's great to see some stuff going on there. We haven't seen a candle close yet. We've just seen a wick. But overall, it's looking pretty good. Everything's kind of climbing back above resistance, and we're looking strong again on Bitcoin. As I said, the entire correction, I was never worried about it. I'm not going to go ahead and say it's over yet because we haven't seen the weekly or the monthly yet, but I mean, it looks pretty good. And I was never worried about this correction. I gave you many, many reasons why every video. I remained non-biased, I remained objective, and we did as a wolf pack as well. And it's great to see our predictions start to play out well again. It's nothing really to be concerned about. Again, unless we break below 25.2k on Bitcoin, there's really no reason to be concerned on a macro scale at all. I want to also talk about a post I made yesterday on my YouTube community page, guys. We have seen, obviously the bearish argument is heavily reliant on the S&P 500 going down, the NASDAQ going down, traditional markets going down, and the bearish argument is kind of assuming that those things happening, those things going down, will drag Bitcoin downwards, and that's the whole basis of the bearish argument. It's the recession argument, right? Now, we've seen extensive evidence. I'm not going to say extensive evidence, but we've seen evidence to suggest that's not going to be the case. For example, when the bank bailouts occurs, and when the bank bailouts occurred, and when the traditional markets and when the economy in general looked significantly worse, Bitcoin gained massive amounts of independence from traditional markets, which indicates that bad news for traditional markets could actually eventuate to be good news for Bitcoin on a long enough time period. So it's great to see. I mean, the correlation between the NASDAQ and Bitcoin dropped from 0.7 as a decimal point to 0.3 as a decimal point, which is a 70% correlation to 30% correlation in less than a week during the bank bailouts, right? What does this indicate? It indicates when the economy looks worse, people are starting to flock to Bitcoin in the same way people flock to gold when the economy looks worse. So Bitcoin is proving itself to be an individual asset in times of hardship, and that's why I don't think the argument for the bearish argument necessarily makes sense logically. I also think that you shouldn't be basing an argument of correlations, because correlations shift regardless of what you think about Bitcoin as an independent asset or not. Correlation shifts, and the thing that hasn't shifted is the 4-year cycle theory. That's been objective the whole time. The correlation's going up, down, up, down, up, down. 4-year cycle theory is still valid, guys. So I made a post, and I'm going to read it to you because it's a very important post. So people are saying basically traditional markets will drag Bitcoin down to new lows. I say 100% pure speculation. Correlations shift. Ever since January, the correlation has been near non-existent. The S&P has gone nowhere, right? The S&P, and by nowhere I mean the S&P has gone sideways, basically. So basically nowhere. While Bitcoin has 2x'd Where is the correlation they speak of that will drag Bitcoin down? Can they recorrelate? Yes. Can they stay or uncorrelated? Yes. While the correlation endlessly and unpredictably shifts, the 4-year cycle and other macro trends remain valid. Just because a claim is bold and sounds good at a glance doesn't mean it's necessarily true. The trend is your friend until it ends. It can certainly end, but it hasn't ended yet. Trust the actual data until it is proven wrong. Trust charts, not recycled one-liners with no base in the charts. Very important post, guys. Okay? And the reason it's important is because it's complete facts. Okay? You need to trust actual data, actual trends that play themselves out on the charts rather than one-liners. That is a one-liner. That's all it is. Traditional markets will drag Bitcoin down to new lows. It's nothing but a one-liner. It's not actually based on data. It's based on a loose correlation over a long period of time. Okay, a loose correlation over a long period of time. The average correlation between Bitcoin and the Nasdaq is something like 0.68 or something like that. It's a 68% correlation. Now, you can see deviations within a 68% correlation, and keep in mind, that's a long-term correlation. We've seen in the last 4-5 months, that correlation averaging at around 0.4%. At 0.4 as a decimal place. And in order for an asset to be considered uncorrelated, right, you need to be seeing a 0.3 correlation. So right now, Bitcoin, mathematically speaking, and based on the definition of correlation mathematically, Bitcoin is barely correlated to traditional markets. Okay, so if you're going to take something that is barely correlated to traditional markets, and if you're going to assume that's going to get dragged down by those traditional markets, when the evidence actually suggests Bitcoin's going to do better when they do worse, okay, you're dreaming, first of all. And second of all, you're not being intellectually honest. And third of all, you're putting yourself in a disadvantage. All right? And I'll tell you why. Because if the evidence does turn out that Bitcoin is going to be dragged down by traditional markets, I can just change my opinion. Okay? When we lose 25.2K, I can just change my opinion and de-risk. And I'll still be up from my original buying price, average price of 19K with the rest of the Wolves Crypto YouTube channel. I'll still be up 31% of my investment in a matter of less than 5 months. So there's absolutely no loss for me, even if the bears are correct. Even if the bears are correct, it was still profit in a profit sense. It was still favoring us to stick by the 4-year cycle theory rather than trusting random data and one-liners. And that's assuming Bitcoin doesn't go up anymore. Okay, so I think we've done pretty well, and I think this is a lesson. And I think if you sat on the sidelines this entire time, listening to those one-liners, they could turn out to be true. You know, I'm not saying they're not going to turn out to be true. I'm just saying you're at a disadvantage if you believe them, right? Because you missed out on all of this. Okay, if you just trusted the 4-year cycle, which is an actual trend, right? Actual data, confirmed, objective data, not something that shifts around constantly, you'd be up significantly. Even if you're wrong, even if your opinion ends up being proven wrong, you'd still be up 30%. And you'd still de-risk 30% profit, and then you can flip bearish and reap the rewards of being bearish and being correct from 25K. So the whole overall point I'm making is trust actual data, not speculative one-liners. And I think, you know, I might leave you at that. One more thing I will say is that FOMC's in 7 days, so interesting, might see some volatility around that period of time. We might actually be seeing this being the last rate hike at about a 79% probability. We'll see a 25% basis point hike. At a 20% probability, we won't see any more rate hikes. So the rates could actually be topped at a 20% probability, but chances are we will see one more rate hike according to the market right now. So it should be interesting. I mean, there could be a shock installed there, which could lead to dramatic market movements, but overall, it should be interesting. 7 days on that. We'll keep an eye on it, and we'll speak about it more when it occurs. But overall, guys, I do have a couple of things I want to show you before we end the video here. Bitgate Exchange, guys, sign up to the Bitgate Exchange, get a 15% discount on commission. Sorry, get a 15% discount on trading fees for your entire lifetime on the exchange by signing up using my referral link. That's what you'll get. Not commission. You get a 50% discount on trading fees for life. You get access to an exchange with 5 times lower fees than Binance. You get access to an exchange which has optional KYC, which has released its exchange data, its reserves data, which has a protection fund, which has copy trading, which has hundreds of pairs for futures and spot. So go ahead and sign up if you're interested. It's the best way to help the channel, and it's the best way to help yourself as a trader. And then, guys, Crypto Academy, you want to learn how to trade, this is the place you can do it. You want to learn how to chart, you want to learn how to trade, find trades, you want to learn about Bitcoin, what is a financial market, you want to learn about how to analyze charts, this is the place to do it. So go ahead and check out the website, read the bio, chuck us an email at cryptoacademycourses@gmail.com, and we'll get back to you with any information, any questions, any answers to questions you might have. And then finally, guys, the VIP group. We've released our VIP results for the last 2 quarters. You can check them out. Been extremely profitable. We trade altcoins every second day on the VIP group and Telegram, and it's 100 USD for a 3-month entry into the group. And I've had, I think we have currently 136, 135 members, something like that, which means we have 135 people who deem that group to be worth it, who are signing up again every 3 months. And so that's pretty good. That's pretty good. So go ahead and check that out if you're interested. And, without further ado, we'll end the video there. Thanks for watching. Hope you enjoyed, guys. Catch you in the next one.